Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Today, guys, I have decided to challenge the hegemony of the euro currency in our weekly analysis, and have decided to dedicate some time to the New Zealand dollar, since I find that the setup that now is forming here is very interesting, and what is more significant is that it's not very obvious, and as I hope that not all traders sees that what is really going on the New Zealand dollar. And that, in fact, if we will become right, this really increase our probability to success. Well, since this is the daily video, here we will speak only about the intraday charts on the daily time frame and the 4-hour time frame. But the core of our analysis, the major setup, is forming on the monthly time frame. This is rather big picture, and speaking in two words, monthly chart points that New Zealand dollar could reach the area around 92. So that is, here we have the current market is 81. So 92 is the 11 points. So not small potential move on the New Zealand dollar. Of course, I do not want to say that this will happen tomorrow, but the amount of patterns, how they combine each other, how they add each other, creates very harmonic picture on the monthly time frame. And with the different patterns that now is forming on the monthly time frame, all of them point on approximately on the same area. It's around 92. So here we will discuss the short-term setup that in fact is the part of the great analysis, but we also could use it differently. Well, and depending on where you usually trade, on the long time charts, on the intraday charts, you will find something useful for you. Well, for instance, here we will speak about the potential DiNapoli pattern. And for instance, if you trade on the short-term charts on the daily time frame, you could trade purely the DiNapoli setup. When it will be finished, just take the profit and exit from the market. If you trade on the long-time charts, you could use this setup for taking the position for the further development on the higher time frames. If you're a scalp trader, you could use, for instance, some position on the intraday charts. So you will understand what I mean currently. Well, let's start from the daily time frame. On the daily time frame, that area that's marked with this red line is not just some kind of the neckline. This is also, as you will see from our weekly analysis, this is also the 50% resistance of this thrust down. In fact, that is the also natural support resistance line on the weekly time frame. So that area was previously support, it holds market, now market has broken through it, now it becomes a resistance. I don't know how about you guys, but here I see some kind of the double bottom pattern or triple bottom pattern. This is some reversal construction. At least with this action, I can't interpret this by some other way. So for me, this looks very similar to either triple bottom or double bottom. If this is really the case, and market will pass through it, move to the upside, will break through this neckline, the potential target of this pattern will be at minimum 86.20. It's right here. So also 5 points, not small move, if this pattern will start to work. But this is only the halfway to the monthly target. But if even this is not the double bottom, and if even market will not behave as the double bottom or triple bottom, we could focus purely and separately on this thrust. So that is not bad thrust, 1, 2, 3, 4, 5, 6, 7 bars to the 8 bars to the upside, and that thrust is suitable for the DiNapoli intraday pattern. Maybe this pattern also could be seen here, but currently it looks more attractive on the intraday charts. Another moment that I suspect that this could be the reversal pattern. Take a look at the response of the market on the potential on the attempts of the bears to push market lower. Thrust down, shallow retracement, continuation. Attempt of the bulls start move up, erased. Attempt again, erased. And now take a look at this action and at that action. This is gradual, choppy, and very common returns right back. 2 step forward, 1 step back, 2 step forward, 1 step back. A bit difficult and heavy action to the upside. And take a look at this action. Much faster, and in fact this action has erased that thrust down. That's good for the bullish perspective. Hence, as markets stand at the weekly daily resistance, that's also some sort of the daily natural resistance, you can see that neckline, and this previous move down were really significant. Here we probably should expect some deep retracement, relatively deep retracement. Hardly it will happen, just small bounce and continuation up. Maybe this will be some sensible retracement, 50% level, 618, something of that sort. Well, now let's shift to the 4-hour time frame. What we have here on the 4-hour time frame, we have excellent looking potential for the Jodnapoli double repo sell pattern. That is the double repo that I like to see. First of all, we have excellent thrust up, very tight double repo before the penetration of the 3x3 moving average. So take a look. First top, first penetration, close above, and almost close below. That's just 1 pip before the confirmation. This double repo hasn't been confirmed on Friday, just for the 1 pip right here. Second moment, take a look. That is the small wash and rinse of the previous highs, and that is potentially bearish, short-term bearish sign. And speaking purely about double repo pattern, that's the double repo that I like to see. It has high second top. Well, I have explained this million of times why I prefer to get the greater top on the upside, because that adds more screaming of the bulls when the double repo starts to work. So many traders entered at the breakout of this potential top, as it was many times here. Breakout, new traders step in. Here as well, at the retracement, that was continuation. But here, traders have stepped in, but now they are in wrong position. Where they place their stops somewhere below the swing low, I suppose. If this is really the case, when double repo will start to work, their stops will be triggered, and they add power to downward action. That's why the second top higher is preferable in the double repo pattern. So this is the perfectly looking the double repo. The tighter consolidation between the tops is greater for the double repo. That's because the reversal becomes fast, and this is really becomes the fast capitulation of the bulls. As we said, probably market should show some more or less deeper retracement than usual. And from that standpoint, I prefer to take a look at this level, because that is weekly pivot support 1, and that is confluence support 79.75, 79.96. It's right here. Weekly pivot support will become simultaneously the support area and some kind of indicator, because we know that if the intentions of the market is still bullish and if the bullish trend still valid, usually the weekly pivot support 1 holds any retracement down within the bull trend. And from that point of view, this will become an indicator. So I do not see any problems here that market will pass through the weekly pivot point in the beginning of the week and show moves to the downside. Because, as I said, we know that market had the resistance. We know that previous swings down were significant. And that's why it's difficult to expect from the market just minor bounce right here and turns to the upside. Probably market will still feel some power, some previous pressure of the bearish action, and some deep retracement could follow. But that level it will be probably enough to reduce the impact of this pressure, and market could really start move to the upside from this level. At least that's the first level to watch for. And finally, I have said this million of times, guys, and I'm not tired to repeat it again. always use the common sense. So we would like to see some retracement to the downside, but we do not want to see this action. So if you will see this really plunge down with the one candle right to the confluence support, do not take the long position. Well, just be reasonable. Just watch for what you would like to see. You could see, for instance, first plunge down significant, but later market should turn to some more gradual action that will just give you some confidence to see real support at this confidence level. The market could stop here. Well, and finally, a second moment for the scalpers. If you would like to trade this, that's not bad setup. If you have the skill to trade on the intraday charts, you could trade the short position with this double repo pattern when it will be confirmed. I don't see any problems with it because this is really a nicely looking pattern here. And guys, when you will read the high time frame analysis, you will just combine the picture, overall picture in your mind, and you will understand how really beautiful picture is forming now on the New Zealand dollar. So it's really a promising situation, and if we will become right, that will give us really very thrilling setup on the New Zealand dollar, and this in fact could give us the direction for the long-term trading. So on the current week, on the next week, on the week after that, we will know the direction, and if our analysis will become correct, we know the direction that will be to upside. And that's much easier to trade when you have the direction on the higher time frames. You just know the overall direction, and you will have just to find the level where to take the position. That's much simpler than when you do not have anything. Well, so enjoy the higher time frames analysis. I think that you will have the pleasant surprise when you understand what I'm talking about, and let's see what will happen really here. So that's really interesting situation here.